Producing over 500 hours per week of talk radio, GCN Live is a world leader in talk radio. Archives for the following program can be found at GCNlive.com.
The stocks discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. If considering on acting on information, we first recommend you seek out a competent, licensed professional for advice.
What kingdom has sent you?
The kingdom of the Most High.
Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. The Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The Genesis Communication Network is proud to bring you Wall Street Raw with nationally recognized market timer and previous Wall Street Week elf, Mark Leibovit, welcoming you on board his financial time machine. And here is the elf himself, Mark Leibovit.
Good morning, everyone. Good morning. It's Mark Leibovit, and welcome to Wall Street Raw on this Saturday morning, December 12th. Thank you for joining us. You have a lot of other choices, particularly on a Saturday morning, and we're really happy you decide to tune in to our Wall Street Raw program. We do not take calls on the show, so if you have any questions, please email me at mark.vrtrader.com. That's mark.vrtrader.com. If you missed previous shows, you can go to GCNlive.com for the archives. Again, that's GCNlive.com. I produce the VRTrader.com newsletter, and please check VRTrader.com out. We have several products. We produce a platinum newsletter, which puts out specific recommendations along with general market commentary at VRTrader.com. We have a silver letter, which just provides general commentary. We have a product called the Vice letter, which covers gaming, alcohol, and the new cannabis stocks, along with a lot of other quote-unquote vice areas. But these areas we decided on to focus on one particular product because of their volatility and the particular focus now in the cannabis space. We also have the gold letter. It's also available at vrtrader.com, and my book, The Trader's Book of Volume, which includes my very popular volume reversal indicator, which is trademarked and is really the basis of the reason we have VR, and that's what volume reversal is all about, of course, but it's the basis of our technical work, which has kept me a survivor for 35 years in the stock market. And I say that in our book, in fact, in the introduction, we talk about how we've never, ever been caught in a market crash in all these years, including going back to 1987, where, in fact, I actually warned about it a month ahead of time on national television and written about it prior to that. And it was just a simple function of following the volume of the market, the smart money of the market, as you will. So what is the volume reversal? The volume reversal is basically a tool, and you can get it at eSignal. Or there are other platforms as well, but eSignal, you can get it by just subscribing to them, and you put it up on your screen, and you see the little buy and sell signals that generate our buy and sells in individual stocks, as well as the overall market. The overall market is, very translucent, I should say, is the best word. It shows you exactly what's happening. In fact, the big break we saw on Friday, over 300 points, and the negative action we've seen here since mid-year, in fact, mostly all year, was a result of seeing that volume come into the market and seeing a lot of sellers come in. If you want more information from eSignal, which, by the way, is a sponsor of this program, go to eSignal.com/radio. That's eSignal.com/radio, and you can learn more about eSignal, get a free trial, and see what I'm doing. And it's very important because I think even if you're an investor, you can put up this volume signal, the volume reversal, and you can see patterns on the weekly and monthly charts. It's just not daily, even though we do tend to put up daily recommendations. I come from a floor trading background. Many years ago, I was a market maker on the Chicago Board Options Exchange, and I learned that you got to follow the movement of the so-called smart money, the insiders, and that sort of created the impetus to put this signal together and to expand it and to produce my newsletter and also trade and invest. So there's a method to the madness, so to speak, where all this comes from. Meanwhile, the eSignal.com/radio link is the place to go there. Also, if you are interested in some of the Joe Wallach health products, I'm a big proponent of health products, basically because my mentor got me started. This is going back in the 1970s, where he took me to a health store, drank some carrot juice, got me started into organic foods and everything. So this is a big part of my life, is almost as much as the stock market. I would say it's about equal. And then I learned about Joe Wallach's work back in the 1990s, and supplements are very important. So you can go to WallStreetRawHealth.com. That's WallStreetRawHealth.com, and see some of the products that I use and that Joe Wallach does make available. So very important that you do that. You may remember me as also a ELF, ELF, on the old Louis Rukeyser Wall Street Week television program from the 1980s and 90s, and big honor. And I was also a market monitor guest with Paul Kangas on the Nightly Business Report for 30 years. You may remember that as well. So it's a pleasure doing the show, but you have to also appreciate that who you're listening to is not a newcomer to the business. And again, as I said earlier, I'm a survivor. We had a real volatile market this past week. As you know, the Fed is supposed to, they're supposed to raise interest rates come this Wednesday, the 16th. We've had a lot of false signals from them in the past that they're going to do it. The probability charts, or maybe Las Vegas betting, is that there's supposed to be an 80% probability that all this is going to happen on Wednesday. It's really a non-event, because a quarter point raise, unless there's something more dramatic coming, really doesn't mean very much. It's virtually zero, and you can't access those rates anyway. It's only from bank to bank. It's the intermarket rates. The banks can borrow at that rate. You can't. So it's really not going to change anything dramatically anyway. There's always a chance at the last minute Janet Yellen won't do it. We have some interesting stories we can go over later that basically say that shouldn't occur. China's not too excited about. They may do something with the yen, and there may be another big devaluation. As you may or may not know, there's negative interest rates in Europe. Some German bonds are recently sold and continue to be sold. Draghi came out with the ECB rate, which was a negative interest rate this past week, which is ongoing, which means you have to pay money to deposit in a bank, essentially. I mean, as incredible as that sounds, that's really the case. So things are really not that great in Europe and around the world, and the small markets around the world, the growth markets, I guess, is the best statement for those, are doing poorly, particularly those tied to natural resources. So, a lot of things aren't going so great. So we'd be the only country or place where rates might be even going up at all. And another interesting insight, for what it's worth, is the bond market, which I'm currently long, by the way, for trading purposes, is actually moving up, and that's the 30-year bonds. So the long-term bonds are sort of ignoring what's going on in the short term, saying, maybe the rates aren't going to go up, or maybe it's only temporary, or things are really that bad that, we don't accept the thought that the economy is improving to the extent that rates need to go up, and we expect to follow the European pattern where rates can continue to drift lower, particularly on the long side. So that's a big, big divergence. And we also had a big of an uptick, not dramatic, but a little bit of uptick in the gold market this week. Way oversold. I know it's been in a downtrend. It does theoretically have some risk, but I think there might be a flight to safety there as well, so we'll have to keep an eye on that for a strong confirmation of a low. At some point you're going to see a huge move in the gold market, whether it comes from this level or $100 lower. A lot coming. So we have a lot to talk about, including our guest Sinclair No, who will be with us on segment 2, so stay tuned.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
and flu season approaches, Silver Lungs is ready to help you and your family through the toughest of the year by supporting your immune system and overall health. From our best-selling colloidal silver generating system to our entire line of silver-based skin gels, nasal sprays, soaps, and silver solutions. Silver solutions remain one of nature's most powerful and least expensive antibacterial agents. Now you can produce your own for pennies a day in the comfort of your home using the breakthrough technology of the Silver Lungs generator. Learn more today at www.silverlungs.com.
Still wondering what to get that special someone that has everything? At ID Stronghold, we still find that a huge percentage of people do not yet have an RFID blocking wallet or purse to protect them from the new and growing threat of electronic pickpocketing. That's right. Even though 40% of all new chipped payment cards shipped in 2014 contain a wireless interface called RFID that allows the account information to be skimmed by a thief passing near your cards, most people are still unprotected. The good news is that ID Stronghold makes luxurious leather wallets and other products that prevent this. ID Stronghold founded the entire RFID protection industry and has been protecting the RFID chips in government and military ID cards for over a decade. So go to idstronghold.com and get that loved one a stylish leather RFID blocking wallet or clutch. That's idstronghold.com. After all, wallets and purses have always been a great gift. Now they are an even better gift. Visit idstronghold.com today.
Paid non-attorney spokesperson Adam Pulaski of the Pulaski Law Firm with principal office in Houston, Texas is the attorney responsible for the content of this ad. This ad is not legal advice, and the choice of a lawyer should not be based solely upon advertisement. Services may not be available in all states. Attention Xarelto users. If you or a loved one took Xarelto and suffered a serious bleeding event, you may be entitled to financial compensation. Xarelto is a popular prescription blood thinner used to prevent blood clots and protect patients from strokes. These serious bleeding events have led to numerous cases of hospitalization and even death. Phone lines are open 24/7. Call 800-261-0937. That's 800-261-0937. Are your Google search results killing you? Unflattering content in blogs, news articles, online reviews, social media, or other sources can jeopardize your reputation, your business, and your livelihood. Let Reputation.com help. Our patented technology will make the truth about you more visible while pushing down unwanted negative content. Improve your Google search results. Call Reputation.com at 1-800-831-0771 for a free consultation. That's 800-831-0771.
911, what is your emergency? There's somebody in my house. Hurry, please.
A home break-in happens every 22 seconds. Homes without a security system are up to 3 times more vulnerable to a burglary. That's why there's Simply Safe. In an emergency, our advanced wireless technology alerts police up to 10 times faster, and your connection to emergency services can't be cut because Simply Safe doesn't rely on landlines. Simply Safe costs less than half what traditional companies charge, just $14.99 a month, and there's no commitment to an annual contract. Protect your family with the highest caliber security. Go now to simplysafedefense.com and get 10% off with free shipping and a 3-year warranty. Hurry, and you'll also receive a keychain remote worth $25. Try Simply Safe for a full 60 days. You'll feel confident that your family is safe or your money back. Go to simplysafedefense.com right now. simplysafedefense.com.
So you've got to take a state construction license exam or certification. Can't decide on what books or what chapters to study? Discover right now how you can eliminate unnecessary books and wasted study time. At contractorexam.com, our study materials zero in on state-required test topics in an effective, multiple-choice format. So whether you're a plumber, electrician, general contractor, or other construction-related trade, contractorexam.com will help get you prepared. Visit us at www.contractorexam.com today.
Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem.
Welcome back to the Wall Street Raw radio show with Mark Leibovit, your time machine for the financial markets. Want to know more? Go to WallStreetRawRadio.com. Now, here's the elf himself, Mark Leibovit.
Morning. Welcoming back my good friend Sinclair No from KFNN 1510 Radio in Phoenix and author of the blog EatTheBankers.com. As always, we have a lot to talk about, Sinclair. Thanks for joining us.
My pleasure, Mark. Thank you.
Well, we saw a lot of stories this week, as usual. I guess the big story coming up everyone's talking about is what's going to happen next Wednesday when the FOMC reports. I believe some of the numbers I've read, 75 to 80% probability it is going to happen, and that's pretty much built into the market now, I suppose.
I think it's pretty much a done deal unless we have a collapse in the next couple of days. The Fed is ready to raise rates. Then the question is, how high will they raise rates and over what period of time? Really, a quarter basis point shouldn't be a big shock to the markets right now. It'll take some time to filter through the economy. I don't see it as a huge negative. The markets have been down a little bit lately. Gone through a little bit of a rough time, but I think actually that this interest rate hike is priced in at this point. It should not be any kind of a jolt to the markets.
Well, there was a survey that was done this week from the National Federation of Independent Businesses, and they saw optimism falling among small business owners. Now, of course, we know the story that Main Street hasn't done as well as Wall Street. This is not unexpected. The impact on the interest rates is probably going to hurt small business more than big business.
Yeah, I think so. Small business owners were turning less confident. They're seeing slower sales, growing inventories. Consumers have been very cautious with their spending as of late. Even as we've started to see a few indications that there may be some wage increases for American workers, it hasn't been enough to translate into American workers actually willing to loosen their grip on a dollar just yet. That NFIB report, National Federation of Independent Business, has slipped down from about 96.1 to 94.8 in November. This number, though, has been relatively strong lately. And we see businesses planning, small business plan to raise compensation in the coming months. That was up in the report. So in the wake of the financial crisis, sales was by far the single most important concern for small business. They were just looking for some way to drum up some business. But that has dropped down as the top concern among small businesses now. Now they're saying they're having a problem with labor quality. I don't know if that's really it or not, but the sales is not their biggest problem anymore. They're selling. Now they're trying to find the people to get the job done. That's a big shift
right there. There's a lot of talk
there.
About training the people for the jobs that are open, that we don't have the trained, skilled labor there. That's been a story for a long time. Of course, I know in my own world, Sinclair, I could use a lot of updated computer and technology training, and I'm way behind. So I can see where that's the point.
And the funny thing is, you got a lot of people out there. I mean, you got people with masters working 2-3 jobs instead of one job that they could call a career. So I don't know. Maybe it's just a matter of connecting people with employers.
And maybe the right training. But meanwhile, the drop in crude oil, which was supposed to stimulate consumer spending, really apparently hasn't happened. In fact, we saw new lows this week in crude oil in the $36.50 a barrel area. So what does all this mean? It isn't the stimulus to a business that everybody thought, and in fact has hurt business since, if I'm not incorrect, Sinclair, you can correct me. I had read somewhere about 40% of U.S. employment is related directly or indirectly to the oil industry.
Yeah, but at the same time, it leaves some extra money in people's pockets. I mean, in most ways, it's very good. Now, it's rough for some areas. It's rough for the Dakotas and Texas and Oklahoma and Montana. Those areas are getting hit very hard, no question about it, and it's spilling over as well to a lot of the mining and raw materials companies. We're starting to see that, but this goes back, of course, to last week's OPEC meeting. Saudi Arabia and OPEC say they're going to continue to produce oil. They're just not going to, and we've seen that. They have been producing more, about 900,000 barrels a day more than is being used at this point. So we've got a glut like we haven't seen in a long, long time. We've got a little price war breaking out between Saudi Arabia. Iran is about to get into the picture again in a big way. You've got the U.S. shale producers. Iraq is pumping out a lot. And then don't forget, you've got Russia, Venezuela, Brazil, Bahrain. They're all desperate for oil revenues right now. They're not going to cut back on their production. As long as somebody's out there buying it, they'll take whatever they can get for it right now. And as a result, we've seen prices drop below that crucial $40 a barrel level. And from there, they just kept sliding. There wasn't really anything holding up oil prices this past week. And as you say, we dropped under $37 a barrel. This has been a wild move, and it's going to have a big impact on the rest of the economy moving forward. You have to think about the deflationary pressures that the Fed is looking at as they're looking to raise interest rates.
And also, real quickly, iron ore prices dropped below $40 a ton. So across the board, it's just a worldwide deflation in the raw material.
That's right. That's right. And even over there, you're seeing the Chilean company Codelco. They're kind of the Saudi Arabia of copper. They say that they're not going to cut their output either.
Speaking of output, we're running short of time, Sinclair, so I appreciate you taking a few minutes on this Saturday morning. I know it's a busy weekend, and if you have time, perhaps we can convince you to hang around for another segment.
Oh, I'd love to. Thank you.
Well, thank you. So we're talking to Sinclair No, author of EatTheBankers.com and financial commentator KFNN 1510 Phoenix, and we'll be back after the break.
Thank you, Sinclair, for pitching in. We did pre-record that interview on Friday with Sinclair. He's taking off for a couple of weeks, actually going to Brazil. So wish I was joining him. I have a little bit of a cold myself here on the Saturday morning, December 12th. So that'd been a great place to go here. But he's going to be taking a break for a couple of weeks, but he said he would be back, and we did pre-record a second segment, which we will bring up in just a moment. So as you can see, a lot talking about this week, including the Fed interest rate. I mentioned that already at the beginning of the show, and markets are really volatile. You saw the Dow off 300 points on Friday, so there may be other factors at work here besides just the interest rate hike. Many of the market segments have been doing poorly all year, and our forecast model, which I didn't really talk about at the top of the show, called for a negative year in 2015. Stay tuned. We'll be back with Sinclair on the second segment. Thanks for joining us here at Wall Street Raw.
Go to WallStreetRawRadio.com for more information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
Chronic inflammation is now known to block your ability to repair and compromises your immune system, making you more vulnerable to all diseases. Since poor diet, injuries, or stress are all contributing factors, many people suffer from inflammation. Your body's number one means of neutralizing the inflammation and the pain that it may be causing is glutathione. Glutathione is the body's number one peptide to neutralize free radicals and thus stop inflammation.
Hi, my name is Jason. I'm 44 years old. For 10 years, I had been suffering from chronic pain in my abdomen and groin that radiated down into my feet. After 3 weeks on One World Wave, the pain in my feet reduced by 50%, and the overall pain in my body reduced significantly. significantly as well. I ran out of One World Way, and the pain returned. I got another container, and again, after 3 weeks, the pain reduced significantly throughout my body. I'd highly recommend One World Way to anyone dealing with chronic pain due to inflammation.
Call 888-988-3325 or visit oneworldway.com. That's oneworld.com.
Hi, I'm Rick Ostick with Famous Footwear. Did you know that premature birth is the #1 killer of babies? That's why we support the March of Dimes in the fight against premature birth. Join us in supporting cutting-edge research, treatment programs, and outreach to help moms have full-term pregnancies and healthy babies. Learn how you can help save babies' lives at marchofdimes.org.
Did you know that home break-ins increase more than 100% during the holidays? It takes just 10 seconds for an intruder to kick in your door, but police response to a home alarm system is more than 20 minutes, and intruders are in and out of your home in 5 minutes. Thieves know that you're not home and have presents inside just waiting to be taken. And if you are home, how safe will you feel with an intruder lurking inside with your family? That's why police across the country are recommending you use door armor, proven to withstand the force of a battering ram. Door armor keeps intruders out. It's easy to install and barely visible, and your door armor is guaranteed for life. Go to InvasionStopper.com for a very special buy one, get one at half off deal. These savings are for a limited time and only available to GCN listeners. Protect your valuables and loved ones this holiday season. Go to InvasionStopper.com now. That's InvasionStopper.com.
Owe $10,000 or more to the IRS?
Get on board with the Tax Admiral. Don't take on the IRS alone. I'll cut penalties and reduce your overall tax bill. Sometimes I can even get it zeroed out completely.
We're an A-rated company helping people clean up their mess with the IRS.
If you owe $10,000 or more, then call the Tax Admiral.
Call 800-287-7180. Again, that's 800-287-7180. 800-287-7180.
Anything that is thy neighbor.
Welcome back to Wall Street Raw. Want to know more about Wall Street Raw and the Leibovit VR newsletters? Go to WallStreetRawRadio.com.
Welcoming back Sinclair Now, our favorite guest on Saturday mornings here on Wall Street Raw. Thanks for joining us, Sinclair, rejoining us, and we have a lot, again, to talk about.
It's been a very busy week, and I think we've hit on a couple of the main points. The Fed interest rate hike that's going to be coming up next week, I don't see any surprise there. What has been a surprise, though, is how oil prices have dropped down below $40. We haven't seen that in years and years.
Well, overseas, there's a lot going on. China is still playing with the yuan, and they're continuing. In fact, they're trying to tie it into the liftoff in the Fed rate next week somehow. So it's an interesting story that I read about. Their reference rate is the weakest since 2011, and they're trying to release pent-up depreciation pressure. What's going on there?
Well, the People's Bank of China reduced the yuan's fixing, which limits onshore moves to about 2% on either side. So we're seeing this back to the lowest level since around 2011. The yuan closing at a 4-year low this week. Biggest loss that we've seen in about 5 weeks in the yuan. And the idea is that they're trying to guide the yuan lower before the Fed raises rates next week. They're just trying to stabilize that economy to a large extent, kind of conducting a little bit of a stress test, if you will, in the currency market before the Fed moves.
the currency war. That's really what it is.
Sure, they're trying to see how low they can go without, turning the boat over. They know it's going to rock a little bit, but still, they don't want to have it. They don't want a desperate situation over there. Meanwhile, we saw central banks around the globe. We're looking at very low rates. The Swiss Central Bank, they're trying to keep their target range for the 3-month LIBOR at between negative 1.25 and negative 0.25%. They left interest rates unchanged on Thursday. Bank of Japan held their key rates at 0.5%. That's a record low for them. They're continuing their QE program. Bank of Korea also 1.5% on their key rate. They note that the U.S. economy continues to improve, but the growth in China and other emerging markets remains slow. So they're all trying to deal with this divergence, if you will, between rising rates in the U.S. and deflation throughout much of Europe, a slowdown in China. This is a tricky little situation. It's going to be interesting to see how it plays out.
Well, it helped Japan because apparently they're going to come out of a recession, or they won't go into a recession because of the appreciation of the currency over there too. I mean, there's a big report that came out this week about that. So maybe it works for Japan, and it's going to work for the other economies that do the same.
Yeah, the initial GDP report from Japan showed contraction in GDP, and it was the second quarter in a row. It looked like they were in a recession. That's the unofficial definition of a recession, 2 quarters of negative GDP. But then this past week they came out, revised the numbers, and said, no, we were slightly positive. It's still not what you would call strong growth, but it's not a recession.
Getting to local stories, class action lawsuit in California regarding Uber. Everybody's talking about Uber and whether they're going to be able to prevent these lawsuits from stifling their business.
This is really a completely different way of looking at the labor force. The model of Uber, and of course there are others, Airbnb. There's everything from driving cars to taking care of pets, and they're trying to say that these Uber drivers are independent contractors. That's what the company is claiming. The suit challenges whether they are indeed independent contractors or employees. Now, if they were employees, that would entitle them to a host of benefits, health insurance. Uber would be required to pay on-the-job expenses like gas and maintenance. The drivers are currently paying for that themselves. Now, there was a class action lawsuit in California that was certified in September. But this week, a Ninth Circuit judge expanded the scope of that class action, basically saying that there was an arbitration clause in Uber's contract, and if drivers did not opt out of Uber's arbitration clause, there was some question about whether they could take part in the class action suit. Judge says that doesn't matter. You're all in if you want to be in. So the class action lawsuit just got really, really big. And this whole idea of the sharing economy is going to ride in large part on how this case gets worked out and whether everybody's an independent contractor or whether they're actually employees.
It's incredible. You see ads and promotion about how people who need extra income can become Uber drivers, and it's become really a national sensation. So I'm not taking sides against taxi cab drivers, but it certainly is a way of creating more employment.
Well, there are Uber jobs out there for people who probably never thought of themselves as being a taxi driver. The taxi drivers have a point as well. They've got licenses to do the job that they do. Some folks love Uber, some folks hate it. I don't know, but we'll find out the future of it, probably in about 6 months or so as this case progresses.
Well, Wall Street is pushing for it, Sinclair, so I have a feeling that they're going to prevail. That's been the story all along with the big money behind this deal and other deals. So
That's
we'll
usually
see.
the case. But meanwhile, there's a lot of valuation in Uber. It's an iffy proposition. I mean, it could continue to have the valuation, or it could dry up almost overnight.
Well, speaking of drying up, we ran out of time, Sinclair. Again, thank you for that lead-in, and we'll talk to you after your return. Sinclair is going to be gone for a couple of weeks on a well-deserved vacation, so we'll be picking up with Sinclair after the first of the year. Thank you for being with us, Sinclair No, author, commentator, EatTheBankers.com, 1510 Phoenix. Have a great trip, Sinclair.
Thank you, Mark. Always a pleasure.
Good morning. Welcome back.
Well, we finished the second tape there on Friday with Sinclair before we took off on the road. So I hope you enjoyed a couple minutes we spent together. And there will be a little bit of a break between now and around January 4th before we get Sinclair back on the show. So we're going to have a lot of filling of time to plan for here, because he's a key ingredient to getting us some good information. We are going to be looking at some more news stories here in segment 4. We're going to look at a e-signal chart and show you some of the correlation between my volume reversal and the movement in some individual markets and individual stocks. We're going to talk about all the major markets if we can. We're going to highlight the big point movers up and down this past week on Wall Street. And we're going to talk a little bit about rigging the markets again, which has been, a big point that I've been making for years, and which is something that most of the financial press really doesn't want to talk about. But we have a lot going on there, including a new study that came out from Berkeley talking about some correlation by their studies and information leaks by the Fed and how it affects the markets. A lot going on. So we're going to check back with you in just a couple minutes. Thanks for joining us here on Wall Street Raw.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
Introducing the all-new eSignal, home of successful traders across the globe. eSignal is packed with new features, including proprietary studies, free education, new content, and usability enhancements. The eSignal 12 series has a revolutionary new look and feel that allows users to quickly access free education and live events, superior customer support, and enhanced functionality. eSignal's Enhanced Market Screener Plus allows you to create custom scans in simple English by combining both technical and fundamental criteria across more than 25 global markets. Sharing with your friends has never been easier. eSignal users can now share with their Facebook, StockTwits, and Twitter friends their trading ideas and charts. And remember, trading education is at the heart of everything we do. eSignal offers in-depth free trading education by industry experts. Test drive eSignal risk-free for 30 days. Sign up at eSignal.com for a personalized demonstration. eSignal, home of the successful trader.
Don't complain about your cable bill going up and up and up. Do something about it. Grab a pencil and jot down this special number, 1-855-905-MY-TV. The more cable TV rates go up, the better digital satellite TV looks. Say goodbye to the cable guy and get more of your favorite channels in 100% digital quality for less money. Call 1-855-905-MY-TV. Sign up for packages starting as low as $19.99, and there's no equipment to buy. You get free HD TV upgrade, a free DVR upgrade, and free professional installation. You control what you watch when you watch it. Record your favorite shows. Pause and rewind live TV. Even skip the commercials. Watch local channels too. At just $19.99, what are you waiting for? Pull out your major credit or debit card. Call 1-855-905-MY-TV. 1-855-905-MY-TV. Say goodbye to the cable guy. Cut costs and get more. 1-855-905-MY-TV. 1-855-905-MY-TV.
This is Dan Pilla. Do you owe the IRS money you can't pay? Are tax debts crippling you? I've defended people from the IRS for over 30 years. I've helped thousands, and I can help you too. I wrote the book on IRS settlement, and I'm telling you, there's no such thing as a hopeless case. Call 800-34-NO-TAX to finally get free of IRS debt. With the IRS's new programs, there's never been a better time to solve your problem. Call 800-34-NO-TAX. That's 800-34-NO-TAX, or my website, danpilla.com.
Are you tired of commuting to a job that makes someone else rich, working harder than ever, but getting nowhere? Do you hate spending hundreds of dollars every week on daycare, having someone else raise your children? With our opportunities, you can start earning money as soon as next week. You get to be the boss, work from home, and live a happier life. At Be the Boss Network, you'll find hundreds of work-from-home opportunities that you can literally start today and be earning money as soon as next week. Go to freedom106.com and start earning money as soon as next week. You get to be the boss. Get out of the rat race. Work from home. Go to freedom106.com right now and change your life today. That's freedom106.com. Go to freedom106.com and start earning money as soon as next week. You be the boss. Go to freedom106.com.
By now you know that wireless technology like cell phones do in fact pose dangers to the health and privacy of everyone. Blockit Pocket's wide range of products are unmatched in providing the protection you deserve. No scare tactics, just common sense. BlockitPocket.com offers quality American-made options to alleviate and eliminate these invisible dangers. Learn more at BlockitPocket.com or call 888-315-9618. BlockitPocket.com, enhancing health and privacy.
Responsibility begins and ends with our partners and our shareholders, and that's it.
There is no freedom without the law.
Get it? Got it? Good.
Welcome back to Wall Street Raw and the final segment with Mark Leibovit. Now, here's the elf himself.
Welcome back to Wall Street Raw on this Saturday morning, December 12th. Glad you tuned in, and thank you again, Sinclair No, for joining us on segments 2 and 3 on this Saturday morning. It's a very active week in the markets, and we like to talk about first the big movers in the market this past week, the point movers. We try to touch on those each week when we do have time, both on the upside and the downside. On the upside, we had some ETFs that moved dramatically because they were inverse to the market, so I'm not going to go over those. They sort of distort the report here a little bit, but we had Current Green Mountain stock, which is GMCR, had a gain of 37 points this past week in a negative market. We have Alexon Pharmaceuticals up 12 points this past week. That's ALXN. Let's see here. We had Eplus EPLUS, or that's PLUS, up about 8 points this past week. And most of the other movers were really the exchange-traded funds, the ones that are moving inverse or 3 times with the market. So I'm not going to dwell on those too much here in this report. On the downside, Berkshire Hathaway Class A, which is $195,000 a share, so I don't think most of you own that, but that was down 8,700 points this week. That's BRK.A if you got a quote screen. NVR, ORD was down, that's a ticker symbol, NVR was down 45 points this past week. BlackRock, which of course is a big money management firm, BLK, was down 38 points this week. Medigus, that's MDGUS, was down 36 points. Graham Holdings was down 31 points. That's GHC. Barclays Bank, they have some problems, was down about 28 points this week. That's ORDI. Allegheny was down 28 points. That's ticker symbol Y. And Bluebird Bio, that's BLUE, was down 24 points. More downers than uppers, obviously, because it was a negative week in the market. So no big surprise there. Speaking of negative, we did see some warnings on our e-signal charts with regard to the indexes and big names, but let's look at a big name like Apple Computer, which generated what I call a negative volume reversal, and it did so earlier in the week. That was on the 8th. That was on Tuesday. So what is all that? I know you're not looking at a computer, and this may just sound a lot of hocus pocus, but what that means is you had a down day on increasing volume coming off of a rally day, indicating that sellers took over, and indeed indeed, Apple continued to move down even through Friday. We saw the same pattern in the big indexes. For example, the Dow Industrials. We follow that with ticker symbol DIA, which is an ETF. In fact, we generated 2 negative volume reversals in the past 4 or 5 days. The first one was on December 3rd, and another one came in on the 8th on Tuesday as well. More sellers coming in anticipating a decline in the market. As I mentioned, our forecast model for the year, which we put out in January, which is based on cyclical work and influenced to a great degree by my old friend Yale Hirsch, who created the Stock Trader's Almanac based on seasonality and other patterns of the market, believe it or not, did say that we could sell off into the end of the year, which is contrary to the historical pattern we usually see here, because seasonality generally points to a Santa Claus rally, a low in the September-October time frame. December tends to be a good month, not a bad month, so it seems to be running opposite unless something really flips around this coming Wednesday. In other words, the Fed decides not to raise rates or some other news event suddenly reverses this market and gets buyers coming back in. But we seem to be in a severe decline here, and we'll see if that changes. One of the things that could be causing it, and it really wasn't talked about that much in the financial press this past week, was that China is indicating again that it may devalue the currency, and it may do so to the extent of 10 or 15%. If you remember when the Yuan was devalued previously, it was in early August, and the big crash, the mini crash, came in on August 24th. If you remember that morning, the Dow was down about 1,100 points, and that came about a week or so after the devaluation. So I think China is sort of shooting across our bow a little bit with a warning shot here and telling us that devaluation could come if the Fed acts this Wednesday. And, in fact, the anticipation of both the Fed hike and the devaluation on the part of China could be the reason the market sold off so much here, at least on Friday. If you remember, in September, the Fed postponed its rate hike as a result of China's devaluation in fear that they would do it again. So, a lot of cross news here. I mean, really, there's no reason for rates to go up. They've been down for about, 7 years at zero, but we're not really seeing any recovery. I'll give you an example. Those on Social Security disability, I think before Obama took over, there were about 7.5 million people on Social Security disability, and the last report, about 16 million people are on disability in this country. That's Social Security, of course. So if we're really raising rates because more people are working and so forth, obviously that's not a good reason. Obamacare, for example, we had 40 million people did need to have insurance, and about half did get it because of Obamacare, but it turns out about 3/4 of those that are getting it are government supported. So to talk about jobs and the improvement of the economy, it's mostly financial engineering on Wall Street, and I keep pounding the table about that, and whether the plunge protection team can come in or the equity stabilization fund can come in here and turn these markets up. I think politically they have to at some point. You have an election next year in the face of the worst economic news in decades. We've seen the market rally here since the 2009 low. So, I'm not going to give up that they can pull a rabbit out of the hat here at some point, but it doesn't mean we can't sell off a bit first, and that seems to be what's happening now. And indeed, perhaps with the civil unrest in the U.S. and the turmoil with the election and the fact that overseas countries aren't doing so well and negative rates in Europe and all these other reasons, maybe 2016 could turn out to be surprisingly a bear market year. I wouldn't have guessed that, but we'll see what our models say in early January when indeed we get a little bit more detail there. So, looking at some of the other markets, Sinclair and I did touch a little bit on the crude oil market. It's really funny because everybody expected the decline in crude oil to be like relieving us of a tax, and that would give us more cash to spend. And retail sales haven't been all that strong, though there have been some indications that many people are now buying on the internet, as you know. But crude oil got down to 35.16 on Friday. We had some technical measurements down to about 32 or so, and we'll see if we get some new ones. But there should be a big buy coming into the crude oil market here when we do get a reversal signal. So whether it's at 32 or lower, we'll report that to you at vrtrader.com and try to trade that to the upside, because like all markets, it's cyclical and each dog has its day. So right now it's being manipulated lower, and we can talk about rigging of the markets to the nth degree with crude oil, but that we don't have time to get into all that on this broadcast. I did mention gold. Got down to 1047, rallied up to 1086.89 area in the past 5-6 days. It's flirting with the 1075 area. Frankly, it still looks to me like it's bottomed in this 1047 area, and it could take off. It has potential, I think, over the next year or so, back up to 1500, but we're going to wait for some further confirmation. But we're not selling any of those coins in the vault, so we're keeping those as a definite hedge. The dollar looks like it has topped out short term, which I think is important if you're looking at the correlation to the commodities and to gold. It looks like we did hit a little bit of a top there. So VR Trader, we're actually short the dollar, looking for a little bit of a play there to the downside, which surprises most, thinking the dollar will have to stay strong with what's going on around the world. But, you know, there was pressure on the Fed, too, because of the fact that so much income is earned by our Dow 30 companies overseas, and as a result of that, perhaps they backed off a little bit in keeping that dollar as strong as it was. So weakness in the dollar, maybe some strength in not oil at the moment, but in gold could result of this. One of the things we're really watching here in terms of turning the market, of course, is not only the action on the part of the plunge protection team, but the internal market. And we've talked about this for a while. Now, the transports have been underperforming for over a year, and the Russell 2000, which is small stocks, have been underperforming for a year. So those markets have to improve here before we can talk about a real resumption of the bull market. So each week here at Wall Street Raw, we do our best to update you on the market, and don't forget to go to vrtrader.com, my website, for more information on our services. And as I say, each week I talk about my old friend Ed Hart at FNN. We will know in the fullness of time. Thanks for tuning in to Wall Street Raw.
Thank you for listening to Wall Street Raw with nationally recognized market timer and previous Wall Street Week Alpha, Mark Leibovit. If you missed any of today's show or to get in touch with Mark, please go to WallStreetRawRadio.com. Any stocks or investment discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. We first recommend you seek out a licensed financial professional for advice. Go to WallStreetRawRadio.com for more information on Mark's newsletters and products.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
We've had an amazing year here at Supernatural Silver. We've truly enjoyed the fantastic response from thousands of people as they've tried our extraordinary product, and we're thrilled at the life-changing results people have. Our company email is continually full of happy, satisfied customers who thank us for the help they've received from Supernatural Silver. This holiday season, as you think of gifts to give your loved ones, consider giving Supernatural Silver, a gift that can help provide good health and wellness, a gift that can change lives and make a real difference. In a world where we are constantly exposed to dangerous health threats, give yourself and your loved ones a fighting chance. Give Supernatural Silver. Go to supernaturalsilver.com and use the promo code HOLIDAY2015 for 20% off. And this holiday season, we wish you and yours the blessings of peace and good health from all of us here at supernaturalsilver.com.